I'm Sydney Williams.
And hi, I'm Chantal Logan, and we are with Charter Waters Financial. So the reason why we decided to do these videos was because we keep getting these questions from our clients and people that we meet, and we want to be able to have an avenue to answer these questions and also give some information out there. So, to the first question.
What are the different types of life insurance?
Okay, that's actually a really good question. So people don't realize that there are actually multiple types of life insurance. They tend to only be familiar with the term insurance that they get through work. So the easiest way for me to do that would be to go through with the diagram. Okay, so the first type that we're going to go over is going to be term insurance. Term insurance, like I said earlier, people are really familiar with because it's paid for through their employer. So their boss pays for a certain amount of term insurance, usually 1 times pay, 2 times pay. But if you purchase it for yourself, it's also going to be the least expensive, pennies on the dollar. So just always remember that. The amount that you pay per month is called the premium. And that can be level for anywhere between 10, 20, sometimes even 30 years, depending on the company. After the 10-year period, though, your cost every single month increases because all the liability is on you as a policyholder. Just like that. The next type of life insurance that we'll talk about will be whole life insurance. So whole life insurance is a permanent cash value product, and what I mean by that is it has, in essence, 2 accounts. One account, of course, goes to the cost of life insurance every single month. So what that means is a portion of every single amount that you pay per month goes towards just however much life insurance you purchase. The other part of your premium goes towards what is called the cash value account. So this account, depending on which company, has a guaranteed interest rate, and you also get paid your dividends into this account. Now, it has a lot of benefits. So say if you ever needed to take money, just like you had a huge repair either on your vehicle or at your home, like a leak in the roof, you can take from the cash value in this account tax-free, and you'll actually be like your own bank. There are no tax penalties for ever accessing this cash value in your account. Because it does have dividends, the cost of insurance, or how much you pay per month, can actually drastically decrease. Around year 14 to 15, you have enough dividends to pay for your premium usually until your policy pays you, which is a really nice benefit. Also, depending on the way that it's structured, you can create a tax-free pension for yourself. You can create a policy that will have not only you on as well, but maybe some of your children if it's within your means. Now, the other type of life insurance is going to be universal. So universal is kind of like a hybrid between term and whole life. And what I mean by that is the monthly premium is guaranteed every single month, just like whole life, but the cost of life insurance is the least expensive to start. So it's level usually for a period of 15 years, but just like whole life, it has 2 different accounts. So instead of the second account being cash value, this cash value account actually goes towards the purchase of mutual funds. So as your mutual fund account is doing well inside of your policy, the amount that you have to pay every month is flexible because if you're doing really well in your policy, there's less that you have to pay. So the price can either increase or decrease depending on how the market's doing.
Is life insurance affordable?
Life insurance is definitely affordable. So, okay. Remember when we got asked just yesterday evening? Okay. So remember when we were asked yesterday evening by our last client, and he said, I was told that I could get $500,000 worth of coverage for $12 a month.
I remember.
But he's a smoker, he's a male, and he's 52 years of age. So what's really important for people to understand is how life insurance companies create the premiums, right? How much you pay per month. So it's based off 3 factors. The first factor is, of course, going to be whether or not you're a male or a female. We get a break. Women live longer. So women are going to have less expensive costs for life insurance every single month. That's just the way it is. Sorry guys, build a bridge, get over it. The second way is, of course, going to be with whether or not your age. So if you're 25, the likelihood of you getting $500,000 worth of term for $20 a month is a lot higher than it is if you're 52, a male, and a smoker. The likelihood of you getting $500,000 for anything short of $80 a month is pretty slim if you are a smoker and a man and 52. So life insurance is really affordable. It's just built towards healthy people, their gender, and then of course your age.
What are the benefits of having life insurance?
There are so many benefits of having life insurance. I remember I met this guy on the elevator just last week, and he said, "Hey, I think I saw your ad somewhere. You sell that death insurance." And I was like, no, sir, but thank you so much for noticing my advertisement. I think that's awesome. But when it comes to life insurance, there are just so many living benefits, right? So when it comes to term insurance, for instance, at certain companies, if you have your own term policy, if you were to say become chronically ill with any type of really, terminal type of cancer, you can actually take from your death benefit while you're alive and apply it towards some type of procedure that could possibly save your life. And that would be for, say, $17 a month, which is really insane to think about. But if you go into the more permanent policies, now you can create a vehicle that's full encompassing for your entire life. So it can include long-term care benefits. It can include different waivers to add riders for your children, additional life insurance to make the costs lower. There's so much you can do with it. You can turn your life insurance policy into a lifetime pension when you retire, tax-free, that doesn't go against your Social Security or any other type of securities. So when it comes to life insurance, yeah, there are a lot of different benefits.
So why is having life insurance so important?
Having life insurance is really important if you love someone or if you owe someone. So the easiest way to pay off a debt is, of course, if you have a term insurance policy. Because say if you're a business owner and you have a loan with the bank for $200,000, they're going to need some other form of collateral, right? So if you were to purchase a life insurance policy for maybe $30 a month and leave the beneficiary as the owner of the loan, whichever bank institution, the debt is covered. And then, of course, if you love someone, if you have a family, most people think their most valuable asset in their life is going to be their house or their home. Because on paper, it looks really expensive, right?
It does.
But just think, if you're no longer home or on this earth, who's going to pay for that mortgage? Who's going to pay for the first car? Who's going to pay for the wedding? Who's going to be there every single year going to basketball games, sporting events, Christmases, Thanksgiving? Your income, you are your most valuable asset. And the least expensive way to cover that, if God forbid something happened to you, is with life insurance.
Makes sense. And the last question is, who would you recommend life insurance planning for?
That's a good question. So, at Charter Waters Financial, we do more than just life insurance, but we do assist with life insurance planning. Life insurance planning is great for people who are, 1, very young, or 2, have a lot of discretionary income and already have established great securities assets. What I mean by that is they already have their retail accounts, their brokerage accounts, their stocks, and we assist with managing those for them as well and with new purchases. But what we also do is we assist with creating a fixed asset, so in case there are low years, they still have the same level of income to help with their families. So a person, for instance, a doctor, say if they have X amount of income, $60,000 a year, they're able to create a pension that pays them out over 3 times what they put in, all tax-free. Life insurance, or cash value life insurance, is probably one of the most malleable tools that you can use in your portfolio that is defensive against down years. So I would definitely say someone with a lot of discretionary income and someone who's very young. So why I say someone very young, especially like say millennials. If you're 26 years old, you just got out of college, you're making a new income, you have a lot of years for compounding interest. So the younger you purchase a cash value life insurance policy, you have more opportunities to overfund it where you can't with a Roth. But neither here nor there. If you have questions, make sure to hit down into our comment section, and we'll be happy to get in contact with anybody. It's no issues.
Yes. And then our inspirational quote for the day will be, or for the week I should say, would be, "With new days come new strengths and new thoughts," by Eleanor Roosevelt. So yes. May you guys have a wonderful Friday, and we'll see you back next week.
See you next week for Candy Corner.
Also, guys, follow our Instagram page at Chartered Waters Financials. Be sure to follow, shout us out, tell your family members, everybody, anybody. You can also DM us. We'll also be responding to DMs if you have any questions, comments, or concerns. And also, we'll see you later. Bye.